Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing new holding stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 43 billion market cap. They're trading at $9 a share and they have 4.8 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. The numbers are up and down. Positive 1 billion in 2020, negative 3 billion in 2021, then back to positive, then back to negative. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's negative in 2020, 2021, and 2022, but they do have a positive in the trailing 12 months, so that's a good sign. Revenue is the sales for the company and doesn't get much better than this. 400 million to 1.1 billion to 3 billion to almost 5 billion. They're crushing it in revenue. The main ways banks make money is on fees and interest spread. The interest they make on their loans. And the spread is they have to pay interest because people put money into the bank account, into savings or CDs. So they pay interest to those people. Then they collect interest from loaning the money out so people can buy homes or cars with those loans. So it's the interest spread. Some banks also take on debt. If it's a US bank, maybe from the Federal Reserve, or any bank may take on corporate debt or other types of debt to fund their loans. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 71 billion. We discounted the numbers back to today's and weighted average cost of capital. We get a value of the company of $58 billion. We divide that by 4.8 billion shares. And we get a calculated stock price of $12. They're trading at $9, so they're trading at a 27% discount. It's a buy according to the model. The last time I did a video on this company was 7 months ago. They were trading at $7.41. My valuation was $8.69, almost exactly where they're trading at today. I usually don't buy stocks like this. Not that it's a bad company, but it's in Brazil, and there's more risk when you invest in a Brazilian stock. It's the country risk. Same thing with China and South Africa. There's a country risk with the stock, and the stock price doesn't appreciate as much as it should. But to my surprise, it turned out great. I bought it in June 2022. I invested $24,500 and I'm up 111%. I have a gain of $27,000. My value is $51,500. I wish I could say this about all stocks I invest in that don't fit my parameters. But this one turned out to be a great find. And I'm still holding it. Do you think I should still hold on to it or sell it and buy something more safe? There are 11 companies in the same industry as new, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend much in CapEx. Most banks don't spend much in CapEx. Citigroup spends a lot, 6.8 billion. They have a really good debt to equity ratio, 0.2. For every dollar of equity, they only have 20 cents of debt, a lot better than the median average. They're the only company on this list that does not pay a dividend, so there is a chance they may start paying a dividend in the near future, possibly this year or next. They have negative free cash flow, but it's hard to look at a bank's free cash flow. It's not as clear as a regular company because they don't make money by buying and selling products. Most of their money is made on the interest spread. So for instance, if they lend somebody $1 million for a home loan and they give that person 30 years to pay back the loan, they have to wait 30 years potentially to realize all those interest payments, all those earnings. Most companies don't have to wait that long to realize an investment. Like Tesla makes a car. Let's say it cost them $20,000 to make the car. Then a few months later, after it's made, they sell it for $30,000. They made $10,000 on that car. It's pretty cut and dry. They rank 9th in market cap of the 11 companies, lower than the median average. JP Morgan is the largest by far. Their price multiples aren't so great. Price to book PE and price to sales are worse than the median average. We can't look at their price to free cash flow since they have negative free cash flow. They don't generate much revenue compared to the median average. And they don't provide their 5-year annual revenue growth rate. I don't think they've been trading that long. Here's some financial metrics from their latest earnings, Q3. They also compare it to Q3 of last year and Q2 of last quarter. Revenue looks great. Last year, 1.3 billion, 2.1 billion now. That's a growth of 64%. And in Q3 2022, that was a growth of 172%. So they're growing their revenue a lot. Gross profit, 900 million. Look at their margins, 43%. A lot better than last year, a little better than last quarter. Last quarter was still pretty strong at 42%. Gross profit margin is gross profit over revenue. It's how well you convert your revenue into gross profit. So the difference between revenue and gross profit, the 1.2 billion, are their expenses. All companies that loan money out have to post credit losses. It's called an allowance. And the higher percent, the higher the losses. It's 4.1% this quarter, last year 3.9%. So it's not too much higher. But you also have to look at the interest they're charging. If they're making a lot on the interest spread, then this 4.1% could well be worth it. Net income of 300 million compared to 8 million last year. Great improvement. Adjusted net income, when you strip out things like stock-based compensation, that's 355 million. Let's go through their third quarter earnings presentation. Here's the growth of their digital banking platform since 2014. It was 0 in 2014, then you could see it's still pretty small by 2017, 1.9 million customers. So they're up to 90 million. 90 million customers currently. That's a lot of customers. They have a stranglehold over Central and South America. They're the biggest company by far in this sector. They control 51% of the adult population of Brazil. That's their main country. That's where they started, but they expanded to other countries. They do show Mexico and Colombia right here. Here's their customers by quarter. Q3 2021, 48 million, and it grows every single quarter by a pretty good amount, up to 89 million. That's a CAGR of 36%, compound annual growth rate. So in 2 years, it doubled their customers. Their revenues quadrupled from 480 million to 2.1 billion, a 103% CAGR. Really impressive numbers. They 4x their gross profit, a 95% CAGR from 223 million to 915 million. All these numbers are in US dollars. Look at their net income, negative, 4 straight quarters. And before that, it was all negative. Now they have 5 straight quarters of positive, and the positive is growing up to 300 million net income. Not all their customers are active, but most are. 74 million active customers, 39 million credit card customers, 65 million new bank accounts, not NEW, NU, 7.3 million loan customers. These are people who took on personal loans. New invests, people who invest in different products like stocks, 12.4 million. New coin, people who invest in crypto, 10.5 million. The big customers, small and medium-sized enterprise customers, there's 2 million of those. That's up 54% year over year. And 1.2 million insurance policies. That's up 50% year over year. And I think new coin is going to grow a lot. They just launched that less than a year ago, and they already have 10.5 million customers. Here's their customer base the last 5 quarters. You can see it was 70 million customers up to 89 million. But with any bank or any company, there are non-active customers. So if you put money to a bank account and never really do anything with it, you're not really an active customer. So 16 million of their customers are not active. They're not doing much. But a majority are. 83% of their 89 million customers are active. So 74 million active customers. A really important metric, almost as important as active customers, is average revenue per active customer. Because even if your customers are flat, but your average revenue goes up a lot, you could make a lot more money than growing your customers and each customer spending less money. But they're doing both. They're growing their customer base and each customer is spending more. The growth in customers went from $7.90 to $10, which results in higher revenue of 1.3 billion up to 2.1 billion, a 53% year-over-year growth. Their credit card volume is up from 13.6 billion to 18.7 billion. Prepaid cards, a prepaid card is like a debit card. You put money into it, but it's not linked to a particular bank account. That's grown from 7.6 billion to 10.2 billion. They charge fees for these products. The loans, they make money, the interest spread. These products, they charge fees. This chart is personal loans in Brazilian reais. It's spelled R-E-A-I-S. Reais. Or if it's one unit, it's real, spelled R-E-A-L. It looks like real. Americans say Brazilian reals, but it's reais. So the origination volume was 4.6 billion reais, up to 8.9 billion. Here's a list of their non-performing loans, 15 and 90 days past due. It is up. It was 2.5% in 2017, down to 1.3% in 2020. Now it's 4.2%. 90 plus day loans, it went from 5% down to 3%. Now it's 6.1%. So they're getting looser with their lending, but as long as they make it up on the interest rate spread. Here's the stock price since they started trading. It looks like they IPO'd in December 2021, and these are the monthly candlesticks. When it's a red candlestick, that means the opening price is on top, the close of the month is on the bottom. So it opened at $11.25 and it closed at $9.38. Not a good first month. The second month opened at $9.60, then it closed at $7.42. So it really struggled in the beginning. A really thin candlestick in February 2022. When it's a thin body, that means there's indecision in the market. The bears didn't win and the bulls didn't win. Although the wick got really high, past its IPO price, its high point was $11.83. But the bears push it way back down to where it opened the month. Same thing in the next month in March 2022. A lot of indecision, not much movement. The wick did get pretty low, so the bears were trying to push the price down. The bulls ended up pushing it back up to close the month. Then the bears took over big time the next 2 months. And its low point in May 2022 was $3.26. I bought it the following month in June 2022. My cost basis is $4.24, so I think I timed it pretty right. When you time it right, it's a lot of luck, because when the stock goes down 50%, you might think that's a great time. Then it goes down even more, so it's hard to know the exact right time. Then over the next few months, it did go up and down, pretty steady within that $4 or $5 range. But starting in April 2023, it had a nice surge. It more than doubled in price. It's still trading below IPO price, but well above its lows in the 380 range. This is a daily candlestick chart. You can see the trend a lot better on this. It looks more like a line. The stock is trading 150% above its 52-week low and only 1% below its 52-week high. I hope there's not a pullback. If there is, I'm going to regret not selling. Their shares outstanding have grown a lot. This is when they IPO'd. It was 220 million up to 4.6 billion. And they added a little more in 2022. Their market cap came down a lot in 2021, then rebounded in 2022. Let's look at the stock on Simply Wall Street. Its last price $9, 43 billion market cap, up 10% in the past week, up 147% in the past year. Let's see what they say about the company. They provide a digital banking platform and digital financial services in Brazil, Mexico, Colombia, and internationally. It offers new credit and debit cards, ultraviolet credit and debit cards, and mobile payment solutions for new account customers to make and receive transfers, pay bills, and make everyday purchases through their mobile phones. The company provides saving solutions such as new personal accounts, a digital account solution that supports all personal financial activities, from daily purchases and money transfers to savings, and new business accounts designed specifically for entrepreneur customers and their businesses. They also offer New Crypto, a solution for buying and selling cryptocurrencies through the New app. New Invest, and investment products that provide equity, fixed income, options, and ETF products, as well as multi-market funds with curated asset allocations based on the customer's risk profile and financial position. Personal unsecured loans, in-app buy now, pay later solution for new card customers to pay credit and debit purchases. They also have New Insurance to help customers secure life insurance and funeral benefits. They were founded in 2013, 11 years ago in Sao Paulo, Brazil. Simply Wall Street's at $5 a share. They say the stock is 84% overvalued. 17 analysts priced the stock at $10. Look how much their revenue has grown since 2018. It was $155 million. 2019, $327 million. 2020, $425 million. 2021, $850 million. And then the big growth, 2022, $1.8 billion. For the trailing 12 months, it's $3.1 billion. The forecast for 2024 is $11 billion, 2025 $14 billion, and 2026 $16 billion. Do you think their revenue will grow this much over the next 3 years? This red line is their debt, $115 million in 2018, up to $600 million in 2021, down to $120 million in June 2021, but their debt has been growing a lot, up to $1.3 billion currently. But you can see their equity is much higher than their debt. Their equity is $5.9 billion. This green line is their cash. They have more cash on their balance sheet than debt. The forecast is for them to pay a 0.3% dividend yield in 2024, a 1.4% in 2025, and a 7.8% in 2026. I can't imagine it getting to this level, but I wouldn't be shocked if their dividend got up to 5% by 2026. 41% of the companies held by institutions, 21% by private companies, 15% by the general public, 10% by VC and private equity firms, 8% by public companies, and 5% by insiders. Lots of different groups owning this stock. The CEO is David Velez Asomo, and the biggest shareholder is Rua California. They own 21%. And when you Google Rua California, you can see it right here. The reporting person for that company is the CEO. So I think it's a CEO's company that owns 21% of new holdings. The Chinese tech giant Tencent is the second biggest shareholder, 5.75%. The venture capital company Sequoia, 5.3%. Berkshire Hathaway, 2.25%. BlackRock, 1.3%. Other big names, Morgan Stanley, Invesco, etc. Their employee count was 2,900 in 2020. In 2021, it's 5,400. They haven't updated this chart in a while. The ticker trades on the New York Stock Exchange, Bursa Muenchen, Mexican Bolsa, Sao Paulo Bolsa, and Colombia Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.